For your business plan, you'll also want to come up with some financial statements. We'll go over these very briefly. First, your balance sheet should show your assets, which are current and fixed, your liabilities, which are current and long-term, and the owner's equity. Remember that assets are equal to the liabilities and the owner's equity combined. You'll also want to include an income statement. It reports the success or failure of a company during a specific period. It can tell you whether revenues are greater or less than expenses, reports net income, identifies sales revenue and cost of goods sold, operating expenses, financial expenses, and your estimated income tax. There are many different ways to analyze your balance sheet. You can do a ratio analysis, such as the liquidity ratio. This is how easily an asset can be turned into cash. There are different ways to doing this. The working capital is where you subtract the total current liabilities from your total current assets. You also have the current ratio, which is where you divide your total current assets by your total current liabilities. Then you have the quick ratio. This is when you add up your assets, inventory, and your prepaid expenses and divide it by your current liabilities. The debt asset ratio is how much of the company's assets have been financed by a loan or some kind of debt. Basically, the higher the ratio, the less equity the company or the owner has. The equity asset ratio indicates the percentage of the total asset the owners may claim. Then you have the debt equity ratio. A high ratio indicates the creditors are financing most of the company's operations. Income statement analysis will provide information on current operation performance and efficiency for your business. You'll want to look at the operating expenses ratio, which is when you divide the total operating expenses with your net sales. You also want to consider the number of times interest is earned, inventory turnover, accounts receivable turnover, rate of return on total assets, and rate of return on equity. All the different analysis you do for your income statements and your financial statements are important to investment bankers and should be done for your business plan. When you're developing your business plan and looking for a loan or venture capital, you need to make sure you cover some important selling fundamentals. You are selling your business plan. Know yourself, know your company, know your products and services, and know your customers. You're going to be honest and frank about each one of these.